Imagine this: a cryptocurrency once hailed as the future of decentralized mining, now teetering on the edge of collapse. The Pi Network coin, which launched to massive hype and climbed above $3 earlier this year, is now clinging just above 60 cents. But here's the twist: if it drops just a few cents lower, analysts warn it could nosedive by 40%, landing at 40 cents or lower. And it's not just price action raising alarms. A massive wave of over 270 million tokens is about to hit the market. The founders are being called out for radio silence, and leading exchanges won't even touch it. So what's really going on with Pi Network? Is this the moment it crashes into oblivion, or the storm before a major comeback? Let's break it all down, because what's coming next could make or break the future of Pi. Welcome back to the channel, where we give you the real story behind crypto's biggest moves. No hype, no fluff, just smart analysis and honest insights. Today, we're going deep into what may be the most pivotal month ever for Picoin. Make sure to stick around to the end because you'll want to hear everything before making your next move. The Pi Network coin is at a crucial point, and June might decide whether it sinks or swims. Right now, the price is hovering around 62 cents after slipping to as low as $0.604 just days ago. That number, $0.604, might seem small, but it's carrying enormous weight. Why? Because analysts across the board are saying if Picoin breaks through that support, the next stop could be 40 cents. That's a 40% drop, in a market already bleeding. Dr. Altcoin, a well-known analyst who's been tracking Pi since its early days, recently stated, if the $0.6052 support fails to hold, Pi could face a dramatic 40% drop, bringing the price down to 40 cents by August. That timeline gives Pi just weeks to hold the line. But when we look at the charts, the pressure is mounting fast. The MACD, moving average convergence divergence, has just shown a bearish crossover on the 4-hour chart. That's a sign of downward momentum picking up steam. Add to that the fact that Pi is still stuck inside a descending channel, and things start to look even worse. It gets more concerning when we look at the moving averages. The 50-period EMA, which previously offered some support, has now flipped into strong resistance around $0.7225. That's not a small gap. It means Pi would need a major surge just to get back to that level. Unless bulls reclaim that price zone with serious buying volume, the trend likely continues downward. And here's where things go from bad to potentially disastrous. Over 274 million Pi tokens are set to be unlocked in June. At the current price, that's about $169 million worth of Pi hitting the market. Imagine trying to support a dam that's already cracking, and then someone opens the floodgates. That's the risk Pi is facing right now. Token unlocks often trigger massive sell-offs, especially when investor confidence is already shaky. And let's be clear, confidence in Pi isn't exactly peaking right now. One of the biggest criticisms facing the Pi network right now is its lack of transparency. The founders, Nicholas Kokoles and Ching Diaofan, have been uncharacteristically silent. Updates have been vague. Timelines have slipped. Promised features and progress toward the long-awaited mainnet rollout remain murky. That's creating a ripple effect across the community, where even longtime supporters are beginning to lose faith. Dr. Altcoin, once a vocal advocate for the project, has even changed his tune, saying, "No one wants to put money into something where the founders won't be transparent." That sentiment is being echoed in crypto forums, Twitter threads, Discord channels, you name it. The mood is shifting. And when community support begins to crack, it's not long before price follows. The frustration is also tied to the structure of the project itself. The Pi Foundation controls over 90 billion tokens spread across 2000+ wallets. That's an extreme level of centralization for something that claims to be a decentralized revolution. And it's that very structure that's made big exchanges like Binance and Coinbase hesitant to list the coin. Without those listings, Pi has limited exposure and even more limited liquidity. That makes it vulnerable to sharp price movements and harder for investors to exit or enter at fair value. Even as community pressure mounts, recent updates from the core team haven't done much to change the tide. One of the latest efforts was a gaming-related ecosystem announcement meant to demonstrate progress. But instead of sparking excitement, it left many investors underwhelmed. While some saw it as a step in the right direction, others criticized it as a distraction from the bigger problems: lack of utility, no mainnet, and no exchange presence. One user summarized the feeling perfectly. Utility is the real power, not just the token. So is there any hope for a rebound in the short term? Actually, yes. There's still a narrow window for a technical bounce, depending on how Pi behaves at its current support range of $0.6052 to $0.6280. If we see a bullish candlestick pattern form here, say, a hammer or a morning star, along with rising trading volume, there could be a quick bounce back to $0.6585 or even $0.7054. Some indicators are showing early signs of recovery. On the 30-minute chart, the Relative Strength Index, RSI, has moved up from oversold levels and is now hovering around 46. That suggests the downward momentum is slowing. Meanwhile, the MACD histogram has flipped green, hinting at the start of a potential momentum shift. But these are short-term signals, and nothing is guaranteed. Pi's price is still stuck below the 20, 50, and 100 EMAs, meaning the overall trend remains bearish. For a real trend reversal to occur, Pi would need to break above $0. 7,200 and do it with conviction. That means strong volume, bullish confirmation, and consistent support. Anything less is just noise in a declining market. Zooming out to the long-term picture, there are still reasons for cautious optimism. Some analysts believe that Picoin could see a broader recovery later in 2025, particularly after the wave of token unlocks slows down by August. CoinDCX, for example, projects that Pi could reach as high as $2.75 to $2.80 by December, assuming a few key conditions are met. First, there needs to be a sharp improvement in real-world utility apps, merchants, services built on Pi. Second, the project needs greater transparency and consistent communication from the founders. Third, and most importantly, it needs support from larger crypto exchanges to inject liquidity and legitimacy into the ecosystem. Let's not forget Pi launched at $3 in February 2025. Since then, it has lost over 78% of its value. That's a steep fall in just a few months. And yet, despite everything, it still commands attention. That's because Pi's core proposition, mobile-first mining and a massive community base of over 35 million users, still makes it one of the most unique experiments in crypto. The question now is whether that vision can survive the harsh realities of the market. This month could be the ultimate test. With technicals flashing red, sentiment deteriorating, and token unlocks looming, Pi has no more room for mistakes. It needs to hold the 60-cent zone and ideally reclaim 72 cents in the coming weeks, or face what could be a brutal capitulation. If it fails to defend these levels, a drop to 40 cents seems inevitable, and that could send shockwaves through an already shaky community. As Moon Jeff, another crypto analyst, said bluntly on X, $0.61 is the line in the sand. Break it, and we're going back to 40 cents. So what's next for Pi? That depends on what happens in the next few weeks. Investors need to stay alert, watch the charts, and listen to the community, because what unfolds in June might just define the future of the Pi network. One thing's for sure, this is not the time to make decisions based on hype. It's a time for strategy, caution, and clear signals. If you found this breakdown valuable, drop a like, share your thoughts in the comments, and don't forget to subscribe for more no-nonsense crypto insights. Until next time, stay sharp, stay informed, and stay ahead of the market.